Hello, my name's KorianBrady, and I am in ENT 630, and this is for my entrepreneurial toolbox, and my topic is sources and uses of cash, really better known as the cash flow statement or the statement of cash flows. So, according to Investopedia, the definition of the statement of cash flows is a financial statement that summarizes the amount of cash and cash equivalencies entering and leaving the business and company. And really, it's a measure of how well the business generates cash and to pay the debt and fund operating expenses. I found a quote online that actually helped me understand or paint a clear picture of what the cash flow statement was, and it reads, the cash flow statement takes the monthly expenses and reverses it. And that actually helped me understand. So the cash flow has three different sections, you could say: operating, investing, and financing activities. Really, your operating activities are your account receivables, account payables, inventory, really just all current assets and current liabilities. As for investing activity, that's your long-term assets such as any future property or future plants that the company or business chooses to invest in. As and the financing activities are stocks, bonds, dividends, or any cash flow that comes from any sort of financing or debt financing. So really, the components of the cash flow statement are broken into two: the balance sheet and the income statement. Note that both of these documents are mandatory for all public companies as of 1987, according to Investopedia. So to break down the balance sheet itself, so the balance sheet reports the company's assets, liabilities, and equities, and this uses it's really used as a good snapshot of the health, the financial health of the business, um, especially when we're talking, since it's an entrepreneurial class, especially when we're talking about investors. And if he or she wants to invest, they will take a long and hard look at your balance sheet. How much equity do you have? How many assets do you have? How many liabilities do you have? And they will use this sheet to make a better educated decision. Um, the balance sheet can all be summed up in this one equation: assets is equal to liabilities plus equity, and just like any equation, it can um, be rearranged in any sort of way. But that's a good way to think about the balance sheet. For example, um, this is just a basic example online that I found of a balance sheet. So you see you have your assets, and it's all your cash in the bank, all your cash on hand, and just any fixed assets like, in this case, a printer, a vehicle, or any equipment in the office. Um, this is obviously dependent on your business. Um, but yeah, all your assets will be listed there, and yeah, any stock on hand. And really, your liabilities are maybe any debt you have to pay. Well, in this case, account payables, um, lease, payments on the car, anything that's coming out of your pocket, really. And equity, uh, as as found or as founders and people in this class, we are, I think, very protective over equity. So this is a section we really need to pay attention to, and that investors will definitely pay attention to. And having an even balance in this equation is essential. and the entrepreneur needs to manage. So next up is the income statement. And really, the income statement is a profit and loss statement, money in versus money going out. Um, like I said, displays the revenue and the expenses. And a good equation for your income statement is your net income will be equal to your total revenue plus any gains you have minus your total expenses plus any losses you have. That'll give you your net income. This also provides a good snapshot, and investors will look at, um, if he or she wants to invest. It also provides insight on how well the business is being managed, run, on really the day-to-day operations. Uh, a breakdown of what an actual income statement will look like I said, so your revenues, so your net sales, interest sales, any sort of revenue that your business receives will go against all the expenses that comes in, the cost of goods, cost to acquire a new customer, uh, cost of cost of rent, any any outgoing money versus any incoming money, and that will give you your net income. And this is a very important document, along with the uh, along with the business statement. Sorry, the balance sheet for investors really to look at. And as founders and entrepreneurs, our eyes should be on specifically this income statement daily, if not weekly. And I would say for the balance sheet, monthly or quarterly. And this is all the citations that I use, and all the websites I got all the either pictures or all the information from. Thank you.